we are on a mission to find out what is going to make us the most money. You'll see I have our 10 high-yielding dividend ETFs. These ones pay monthly. This is going to be a new account created for the channel to see how these can perform against the weekly paying dividend ETFs, which is probably the most popular series on the channel so far. So if you guys know us from the weekly payers, I'm curious to see, do you think these monthly payers will be able to keep up? The Yield Max weeklies have been going insane. YMAG and YMAX are going to be tough to beat. And if you've noticed, there's no Yield Max funds in here. Well, there's a reason for that. I have a full account dedicated just to the Yield Max ETFs, and I'm so curious how that one is going to do compared to this one and how both of them will compare to the weeklies at the end of this challenge, which is going to go until I don't know when. There's no end date on it. I will do it all through 2025. So if you're interested in high-yielding dividend ETFs that pay monthly, weekly, all of the above, you're in the right place. Don't forget to like the video and subscribe so you don't miss a future update. So before we get into the details of all of these high-yielding ETFs, let's roll the intro. If we are going to beat the weekly payers, let alone the Yield Max funds, we are going to have the best of the best. Now, these ETFs that I've chosen, I think are the best of the best. I think if anyone can beat the other ones, it's these. Starting strong with the NEOS funds. We have 3 from NEOS, starting with SPYI. Now, it has a near 12% distribution rate and a very solid history. We're going to check out the drip calculation for each of these so you guys can see what I see and why I chose these ones. We can move through the next ETFs as well. They have QQQI. One of my personal favorites, one of the most viewed videos on the channel actually, is the QQQI video, and it's near to a 14% distribution rate. And I know what you guys are thinking. That's not that high, but the return has been above this. I've been tracking it. You will see on the drip calculator, the return has been very, very solid. And then their newest one, which is a bit of a wild card, is IWMI. Now, the weekly payer by defiance is IWMY. Don't get those two mixed up. I have before in the past, and it's not fun. IWMI has a lot less of a history than the other 2 NEOS funds that are in the account, but the distribution rate is very, very solid at just under 15%. We're going to see a lot of the same stuff from these funds. They want high monthly income. They're managed by NEOS, and the call option strategy is pretty similar. One key factor is the gross expense ratio has gone up a little bit. It's closer to 0.80%, so always remember that. Taxes can be an issue. I'm investing in a Roth with this challenge, and net assets is $145 million, so it's a little bit smaller. When we jump back over to QQQI, we can actually see their net assets at $763 million. So a large leap. And that's what I meant. IWMI is significantly smaller. And then net assets, no way. SPYI is at $2.6 billion. I love the NEOS funds. You guys know that I like the NEOS funds. I've talked about it before. But I think it's a really key factor looking into these, doing the research, trying to find how we're going to be able to beat these, because the Yield Max funds as well, they've had phenomenal histories. So we're going to have to rely on the consistency of both growth and dividends from these ETFs to even come close to the Yield Max, let alone those weekly dividend ETFs. Now let's jump into the drip calculator for our first 3 high-yielding, high-income ETFs. All right, all in one go. With SPYI, we can start off really, really strong. You guys can see the total return so far has been 32.41%, an average annual total return of 12.64%. I'm happy with that. I think if it can average that, as well as some of the others with a little more growth, SPYI might be on the smaller side because it is such a large AUM. There's tons of money in this one already, so it might not have the growth capabilities of the other 2, but I still think the return is going to be very, very solid. Now, when we go to QQQI, again, a very popular fund. This one, even better. Total return 20.62%, an annualized gain of 21.94%. So it's only been trading since the 30th of January. So not even a year on this one. And we're already up 20.62%. And that's what I mean. I think they have more room for growth. And in my opinion, IWMY could follow this. I don't know if it will because it's a different, underlying asset, but still we need these kind of returns if we are going to combat the other accounts. And so let's see how IWMI has done. We see not terrible. It's only been, not even 6 months. Annualized return, 14%. Total return so far, 7.54%. And we are on a bit of a dip. Now, I'm waiting to buy these. I'm planning on buying them within this week. I'll buy $100 of each of these, and that's going to go into the account, which I will then track from that point onward and do probably monthly update videos on this because I think it is really cool, but I don't think it's going to be as glamorous as the weekly payer. So I don't want to overdo it with the content on there. But we will be doing the Yield Max videos every other week because the price changes on those so crazily, and the dividends are pretty insane. So I'm happy. We might do this one every other week as well. Who knows? We'll see. Only time will tell. But a pretty solid gain. I think this one does have a good chance of running back up, probably matching the 20% return from QQQI. But we don't know. We don't know what the market's going to do. We have no idea. We're going to go back into our spreadsheet and let's check out the next set of dividend ETFs that are going to make us a lot of money, hopefully, in 2025. So we can see the NEOS funds take up a lot of the account. They're 30%, but I think it's worth it. Next, we have PROSHARES, which we have SPYT and IQQQ, which is really funny. They're kind of similar to the NEOS funds, but the returns have been really, really solid. I'll tell you that right now. I was very, very surprised by SPY specifically, but I'm not going to tell you yet what has the best return so far because I think it's going to surprise you. I think it's really going to surprise you because it surprised me quite a bit. So let's jump into the PROSHARES website and take a look and then throw these bad boys into the drip calculator and see if they can even come close to keeping up with our weekly payers. On the PROSHARES website, we can see there are 3 of them. I didn't include ITWO. I don't know if that's going to come back to bite me or not, but we see SPY with a really, really solid dividend and return. You can see the growth over time. We actually don't even need the drip calculator. You can see at inception, if you had invested $10,000 into this, it would be at 22% up. So you're almost 23. You'd be at just over $12,000. No complaints there. Looking at the snapshot, lower expense ratio than the NEOS funds. Maybe I should be buying these instead in my Roth. What am I doing? And you can go through and look at all the sectors and such and the distribution histories and all of that. But all in all, these funds have impressed me. IQQQ. Oh, man. Am I going to change it and go back and put ITWO in there? I might have to. Going down to the chart, since inception, we can see it is up 15.52%. Inception was March 18 of 2024. So not even a full year with this guy. Still up 15%. This is drip on, I believe, not just the price action, but still, that's a phenomenal return. Phenomenal. For fun, let's check out ITWO. I might have to do it. I might just have to buy this one. A lot less history. 4% up since trading since September 4. So a lot more to come from this one, I'm sure. I do think these ones are just solid. I'm really, now I'm like antsy. Maybe I should have bought ITWO instead. So I'm not going to throw these in the drip calculator. We're going to move on to our next fund, which is the one I think is going to surprise you, JEPQ. The thing with JEPQ, you guys know if you watched my high yield account from last year, it rocked it. It did phenomenally well. Way low expense, 0.35%, 30-day SEC yield, 9.76%. The thing with JEPQ that made it stand out was the growth. It had insane growth, not dividend growth, just price action growth that we'll see when we plug this into the drip calculator. But we can see asset class, it's a U.S. equity. You can see the inception date of 2022. You guys probably know JEPI. If you are familiar with either of those, JEPI was so popular like post-pandemic. I think 2022, it was one of the most purchased ETFs aside from like SCHD. So it grew in popularity like mad. And since then, they've realized they can make a lot of money on these funds. So we can see the yield, JP Morgan's, their website is really, really solid. Their yield, 12.42% over the US high yield of 7%. You can go and look at the managers. I'm not going to do all that on the video because I want to keep it fast and moving. We have a ton of great ETFs to look at, and I don't want to, bog it down. But let's pull this up in the drip calculator, and let me show you what this thing has done. Really, really rough start, and that is a key factor with JEPQ. Total return is 46.56% since May of 2022. And let me tell you, if you factor out this loss year and go just on the gains, it goes up like crazy. Yes, we have a 15.32% average annual total return, but with that near full year of being beaten down, imagine if we just saw this trend continue. We didn't go through any of these crazy dips. That's what I'm looking for. Of course, there's always going to be some volatility. I'm not saying that there isn't, but I think that JEPQ with a good year could have a solid chance of outperforming a lot of the other funds in this account. And I know over the last year, I think it was one of the highest ETF performers. And I'm happy with it. Like I said, I had it in the other account. I'm probably going to keep buying it. I think I have it in my Roth. I know that I do because I love this one so much. Maybe I'm a little biased, but hey, who knows? Let's jump into our next ETFs that are going to get a little bit riskier. With high risk comes high reward. We are looking at FEPI, the Rex FANG and Innovation Equity Premium Income ETF. That is a mouthful as well. We have a distribution rate of 25.2% as of sometime in December. Now, the thing with FEPI that I like is it's big tech with covered calls, income potential. That's as simple as it gets. Looking at their fund assets, $445 million, fairly large, not bad. Expense ratio of 0.65%, also not bad. I'm not going to dive too far into each of these because, like I said, I want to keep the video going because some of these, they're interesting. I've made content on most of these before. And so if you want to look at these more in depth, check out my channel. Moving over to their newer fund, let's check out AIPI, and they actually have CEPI, which people have been discussing. I don't know what's going to come of that one yet, but AIPI, a 34.8% return, which is insane. Sorry, distribution rate, not return. Those are very two different things. That's a really solid distribution rate. It's paying out a ton in dividends, and this one's AI stocks. So if you think big tech is going to do better in 2025, if you think AI is going to do better in 2025, you can take your pick. There's a lot of options, and I really like the diversity. And I think AI is going to go insane still. I know people are saying, like NVIDIA is slowing down, AMD is slowing down. They might be slowing down. Doesn't mean they're done. Does not mean they're done. I think AI is going to continue to change the world. We see fund assets, $211 million, and expense ratio of, again, 0.65%. Now, all we have to do to figure out if these are worthy is throw them in the drip calculator. So let's jump back over. Okay, so FEPI had what, a 25% return or distribution rate? I did it again, distribution rate. And we see a total return of 26.89%, an average annual total return of 21.10. That is total return, which is very solid. If it returned 21% again, I would be stoked. I'd be very happy. A lot of these, SPY did outperform a lot of these funds. And there's a lot of reasoning behind that. Dividend investing isn't about the growth. SPY had a great growth year, but if you look at the track record, I like dividend investing over just growth investing for a number of reasons. But I think FEPI it's a good choice. I think it's gonna perform well. And now don't take my word for it. It's not financial advice. Let's see AIPI. Wow. Annualized gain of 28.49%. Total return 16.94%. So this one, again, hasn't even been around for a full year. But the AI stocks have been booming. We've seen a little bit of a market pullback. Nothing too crazy by the looks of it. But I think this yield could set us up very nicely. And honestly, even if we don't track, I'm going to track everything. But throwing the other accounts out of it and just focusing on this one, I want to know which of these funds performs the best. These are high-yielding dividend ETFs. That's what the channel has become based on. That's my style of investing. So I'm really happy to track this and find out. And even though people may be more interested in the weekly payers, this is a really good resource to see how it's going to perform and how you can compare them. You need to diversify. I always recommend diversification. If you put all your eggs in one basket, I don't know, if you lose that basket, you're stuck. So that being said, let's go from our funds here. Let's jump into our final two funds, which again are very risky. We got to do XPAY. We got to do it. The S&P 500 Target 20 Managed Distribution ETF. This one is really interesting, and I just put out a video on it. I'll link it at the end of this one. If you put $10,000 into XPAY, how much would you have after 5, 10, 15, 20, 30 years? And the video did well. I think you guys are interested in this one too because it's a really solid design. 20% is doable. It's not easy. It's not always, sometimes it might even underperform like we've seen over the last year. But still, 20%, if I could get 20% every year over and over again, I would be psyched. It has paid out some distributions. It's only been paying for, I think, 5 or 6 months. So there's not a lot of history there. It is a little bit higher risk. And I'm okay with that. That's the point of this, right? So $100 into each of these, we'll see what I can make. But I'm really interested in this one. It's the only fund from Roundhill that's going to go in here. And I wanted to have one Roundhill and one Defiance, which is, surprise, the final fund. in here to see, because we'll see how these ones, specifically just these two in this account, how they can handle the yield max funds. I want to know if any of these are going to run away and you know, steal the show, or if some are going to fall back and be disappointing like we saw with our dividend kings in our challenge last year. So really, really excited. Let's put this one into a drip calculator. But first, let's expose what the final one is. All right, I know you guys might be disappointed. SPYT, it's not BITO. I didn't do BITO for a number of reasons. I looked at the total return, I looked at the drip calculator, and it was ugly. It was ugly. I'm curious. You guys seem to like BITO quite a bit, and I'm not knocking it. It makes me a little bit nervous. I don't understand it nearly as much, and a lot of people love SPYT in the comments as well. So we can see the Defiance S&P 500 Income Target ETF. I think this one's going for 20% as well. It's the same type as Roundhill. Paid out monthly, which I absolutely love. And they have the distribution rate at 20% flat. I don't know how accurate that is because it has paid out some dividends as we've seen, but they go for the same kind of thing. They want earned potential, monthly income generation, all this kind of stuff. Moving downward, we can actually see shares outstanding. I want to see the AUM. Net assets, 93.45 million. Small. Very, very small. And an expense ratio of almost a full 1%, which is crazy for a monthly payer. I've seen that for the weekly payers, but not a monthly. Maybe there's a reason for that. Maybe Defiance is trying to get more money out of us. But now I'm really curious how SPYT is going to do versus XPAY. You know, there's a bunch of mini challenges all wrapped up in this one challenge that I'm so excited for. And I know it's going to take months and months to get any actual data out of it, but I'm pumped. Let's go to our last drip calculations and see how these ones have been performing. Throwing XPAY in. I want to do another shout out to dividendchannel.com. I love this calculator. I use it quite often. All right, XPAY has come down quite a bit. Again, it only has been trading since October. So we've only seen, less than 2 months. So it hasn't been paying that much, actually. Very, very new. I think this might be a little bit off. I know I just shouted out the channel. I think they have had more distributions than it's showing, but that's all right. Still, we have a total return of 0.42%. Nothing crazy, nothing to write home about, but our fingers are crossed for this guy. There's not a lot of history to go off of, so I'm not going to knock it. We're just going to buy and hold and see how it goes. It's $100. Like, how much can I really lose? My ego, my dignity? Potentially. All right, SPYT. Dividends reinvested per share, $3.32, so some good dividend history. It's been paying since March of 2024, almost a full year. We have 10 months in the books, and we have a 13.26% return. A little bit lower, but you're looking at a roughly annualized gain of just under 16%, which again, I think is safe. You know, I think our saving grace with the weekly payers, and I'll link that most recent video at the end of this one for those of you that are interested. I think our saving grace is going to be the Defiance weekly payers holding that account down, because Roundhill's been doing pretty decent. But the yield max, YMAG and YMAX have been going insane. They are already at, I think last I checked, and you'll see it on that video, 14 to 15% in like 3 or 4 months. So we're going to need to rely on Defiance NAV erosion to save us. And I mean, YMAG and YMAX are also in the yield max ETF account. So that one might run away depending on if NAV erosion can stop it or not. All in all, who knows what is going to happen. So there it is. That is our full account for the high yielding monthly paying dividend ETF account. I'm really, really excited with these. I like these picks a lot. So let me know what you guys think. If I get an overwhelming number of comments telling me to buy BITO, I might do it, but I'm really not going to like it, and I'll tell you that right now. If you guys think I should buy ITWO over these other ones, let me know as well. Also, I'm going to be doing a full breakdown on the return of these funds in 2024. So if you guys want that, don't forget to like the video and subscribe. Stay tuned for that. We're going to look at a lot of these high-yielding ETFs and how much money they actually made people. So thank you guys so much. I hope to see you in the next video.